Dean's virus-free studio, powered by Century Laminates and Century Ply.
Hello and welcome to Halftime Report. Well, we're halfway through the trading session. The markets are trading in the green. We're seeing a bit of a pullback after the selling that we saw on yesterday's trading session. Let's see how the second half of trade goes. But for the time being, the Nifty Bank is up nearly around 380 points odd. And that's the segment where we're seeing a big pullback in today's trading session. I'm Nigel D'Souza, and joining me today is Surbi Upadhyay. Hey, Surbi.
Hi, Nigel. Absolutely. Early morning, a bit of a scare, right? It seemed like we were going to break yesterday's lows, but since then, as you're saying, the pullback is pretty strong, all thanks to the banks. Reliance is a bit of a problem for this market once again today. And it's interesting to note how these big tech boys sell off even when they come out with great numbers. So maybe just a hint of caution in the market.
Well, that's right. It seems that the market already factored in a lot of that good news that had to come in from these tech companies. On a day-to-day basis, we see them reporting fantastic numbers, and we see some of these stocks that come in for some selling. But there are plenty of stocks that are moving around besides the tech companies as well. So let's start off with Sonal. She's tracking a very, very important story with regard to the effectiveness of COVID-19 drugs. Sonal, fill us in with what that report is suggesting.
Thanks a lot for that, Nigel. Well, just to give you a background, a lot of these medical agencies, they allow the drugs and repurpose them for COVID-19 treatment. And that happened with a lot of drugs, something like a Remdesivir as well. And since then, WHO has been doing some studies as to how effective these drugs really are. And now they've come out with a report where they say that they have done randomized control trials on the efficacy of Remdesivir. And they have come out with the result that this is not as effective in COVID-19 treatment. In fact, it's not only Remdesivir, some other drugs, something like hydrochloroquine, interferon regimens, they have appeared to have little or no impact on COVID-19 treatment. They did it across 30 countries and all around 11,000 adult patients. However, there is a report from Reuters which says that the main manufacturer, that is Gilead, the company says that this WHO data appears to be very inconsistent, and there are peer-reviewed journals validating the clinical benefit of Remdesivir. Why is this particular drug of so much importance? Because a lot of companies have actually tied up with Gilead for the manufacturing and marketing of this drug. In India itself, there are around 6 companies which have entered into that marketing agreement. Dr. Reddy's, Cipla, Zydus Cadila, Hetero Labs, Jubilant Life Sciences and Mylan. In fact, for Dr. Reddy's, analysts are expecting a sizable chunk of revenues to come in from this drug. For FY21, they expect a 120 crore revenues to come in, and for FY22, 90 crore revenue addition is expected from Remdesivir itself. So we'll have to really watch out for what the final result of this particular study is. But for now, WHO is saying that it is not as effective.
Okay, got that. Thanks, Sonal, for that important update. So that's a report that you can't entirely ignore. Let's see what more data comes out on it. But for now, let's come back to some stories right here at home. And it seems that there is some sort of a fresh impetus when it comes to the government's strategic divestment drive. Sapna is joining in on the latest that perhaps is powering BPCL. And we're getting some news in on this front. Sapna, do fill us in.
Well, clear indication coming from the government, at least at their end as of now, they're hopeful that further extension in the EUI timeline for inviting the bids for the BPCL strategic stake sale, that may not be required. In fact, what the government probably has in mind is, more the merrier, because this entire strategic stake sale proposition has to be competitive in nature, because, that will lead to better price discovery as far as the stake sale is concerned. Of course, we can't say at the moment whether the conclusion will actually happen, the transaction will actually get concluded in the current financial year. But at least the government at its end is very hopeful that, post November 15, probably no further extension will be required as far as the invitation of bids for the BPCL stake sale is concerned. Similarly, as far as the LIC IPO is concerned, the legislative amendments for the LIC IPO to enable the listing has already, draft cabinet note is already doing the rounds. Once it's concluded, the cabinet note will be given. It will come up for a cabinet note shortly. But having said that, the indication as of now is that probably the listing is unlikely before March. And the reasons are very clear. There will be a lot of processes required, both from the DFS side as well as from the DPM side, to get LIC ready for the listing. So it's going to be a mammoth exercise and a very time-consuming exercise. Keeping that in mind, it may just be possible that the LIC IPO may spill over to the next financial year. But of course, BPCL will be the big one to watch out for.
Okay, all right, Sapna, thanks so much for that. Well, moving on then, AC manufacturers and refrigerant makers, they've surged as the government bans import of air conditioners with refrigerants. Manglam joins us to make sense of all of this. Manglam.
That's right. So, late last night, the government issued a notification that there is a ban on imports of air conditioners with refrigerants. What this means is that a lot of the larger players who would earlier import both air conditioners and refrigerants separately, not a big impact for them, but a big impact for those who were smaller players who would, import air conditioners with refrigerants. And this accounted for nearly 3,600 crore worth imports last year. Moreover, it's about 15% of the entire AC market size. The important positive from this is the fact that because these smaller players who will now not be able to import ACs with refrigerants, larger players stand to get some more additional market share. So that's why perhaps players like Blue Star, Voltas, all of them are gaining. But, in terms of business prospects, it's a big positive for Amber Enterprises, as a lot of people will now start to get their ACs manufactured locally or assembled locally after importing both ACs and refrigerants separately. And over and above all of that, positive prospects for business coming in for refrigerants also. The chemical makers, the likes of SRF, Naveen Fluorine, as well as Gujarat Fluorochemicals, which is why all these stocks are higher. Yes, it is a positive for brands, but a much bigger positive for AC manufacturers, the likes of Amber, and a hopeful positive for the refrigerants, which is why those stocks are also buzzing around today.
Okay, got that, Manglam. Thanks very much for telling us what's keeping those stocks excited. Now, speaking of another stock that's been hitting the headlines, but for the wrong reasons, it's UPL. It's trading down almost 5% after KPMG Mauritius resigned as auditor of UPL's subsidiary, UPL Corporation. This is effective the 8th of October. Sonal is back with us with some more details. Sonal, any clarity on what went on here?
Well, Surbhi, what really happened is that the company actually requested KPMG Mauritius to resign from their current operations because they wanted to rejig their audit operations globally. So that is why KPMG Mauritius has actually resigned from their operations. But the company goes on to clarify that they confirmed the appointment of the BSR company, that is an affiliate of the global KPMG group, that will continue to be the statutory auditor of the UPL group globally for the consolidated financial statements as well. In fact, KPMG also in its resignation letter clarified, saying there are no circumstances connected with our resignation which we consider should be brought to the notice of the members. The stock, after falling down as much as 10%, has actually recovered from those lows. However, a lot of brokerage views that are coming in, for instance, Phillip Capital says that they remain positive on UPL. Audit responsibility change is what has led to this resignation, but overall they're quite positive on the operations of the company. However, Antique does not really concur with those views. They say that KPMG did not have the team to carry out audit in the Mauritian subsidiary. However, it is an important subsidiary of the company where the company holds around 77.8% stake, and that's why they believe this news to be certainly negative and to put pressure on the stock in the near term. However, they await more clarity from the management on the same.
Okay, all right. Thanks so much, Sonal, for joining us in and, in fact, filling us in with all those details. But the pharma sector, that's been in focus, and a lot of deals are expected in this sector as well. Now, CNBC TV 18 learns that Suven Pharma has been put on the block. Nisha joins us to fill us in with all those exclusive details. Nisha, fill us in.
That's right. Suven Pharma, as per the sources with direct knowledge that I have spoken to, and at least two independent sources have confirmed to CNBC TV 18 that Suven Pharma Group has kick-started a stake sale process. What I do gather is that the promoters are open to exiting the company completely. They own 60% stake in that company, or at least go for a part stake sale, which could be substantial. Now, they have reached out to the private equity players as well as the strategic players for this stake sale process. Now, remember that the valuations of the pharma companies have really been on elevated levels because of the euphoria that is seen in this particular sector, and the private equity industry is keenly looking at this. So there could be demand, though I gather that one of the big strategics which is on the prowl may find this particular company too big to chew at this point, because its market cap has really gone up above 8,800 crore rupees. What I do gather from sources is that the stake sale process has already begun. Private equity players are likely to line up. And this is, remember, a specialty chemicals as well as the contract manufacturing company, and commercialization of molecules going forward will give an uptick and growth to this particular counter. After reaching out to the company's management, they declined to comment on CNBC TV 18's query on the deal development.
Okay, all right, Nisha, thank you very much for getting us the details on that one. So let's see how the story goes around Suven. We do need to take a quick break right now. Acrysil has been buzzing. Thank you, Nigel. Has been buzzing of late. We'll tell you why. There's been a large block deal that happened with the company as well. We get chatting with the management. Chirag Parekh, chairman and MD of the company, will join in.